Welcome to week one, and we are starting on our week one content, which is stakeholders and CR, corporate responsibility. So let's just get straight into it. First of all, stakeholders. So stakeholders are people that affect or was affected by decision. So the business decision. In here, we are talking about all people that are involved in the decision and also those people who will be affected. So there is three category which we can classify stakeholders as organization and market and society. Which for organization, we can see there's employee, manager, board of directors, which are also, we can call them investor. And for the market, there is competitors and clients. Also, there's society, which is including general public, government, and environment. All sort of our decisions will affect these stakeholders, even though they are in different kind of environment, different position. They will all experience different degree of impact from our decisions. Okay, so to include all stakeholders' perspective in consideration, especially for good decision maker, we have to hire expert to get all those information and considerations. They also provide specialized knowledge about what we should do in certain decisions. So we need to know what expert we could find in accounting for different things. So for business, for example, should we increase the sale? Should we increase the production? Those kind of thing we need to ask economists. And then the next one is lawyer, which of course they will cover the law part, which is kind of very common in any business decisions. And also there's CRS experts. So CR stands for corporate responsibility, which is a very important part in nowadays. And there's so many ethical standards regarding corporate responsibility in 2022 and also 2023. So we also need people like that to help us making decisions regarding to those aspects. The next one is management consultant. Management consultants are responsible for integration of different ideas and get to conclusion which that everyone in the decision-making team agrees. And we have to know that for any business decisions, there's ripple effect. And those who are primary, which we generally classify them by using the definition of contracted, which means we sign a formal contract with those people, those stakeholders. Those are primary contract stakeholders, which will be closer to the center of the ripple, which takes more effect. And these are kind of like employer and investor. And they are strongly impacted and usually in the short term of time frame. And for those secondary, which secondary stakeholders are usually non-contracted. And these are agencies such as environment, future generation, and all sort of other people, including public and and they are less impacted. But this less impacted doesn't necessarily mean less in the extent. For example, for environment, there's pollution, and this pollution is not easy to measure in terms of the degree. So we will just say it's generally in the long term. And over the long term, this impact may be significant. And there is normative and instrumental decision, which for normative, that's what we should do, what we ought to do. For example, we should not hire child labor. And also there's instrumental, which we need to do. So utilitarian thinking, that's like we should use child labor to reduce cost. And for a good decision maker, we always have to consider both perspective, including instrumental, what we need to do, and then what we should do, so ethically. So generally apply instrumental and normative thinking when we're making decisions. And that's all for today. Thank you for listening. See you next time.